Mr. Sanjiv Bhasin, as always, joins us on the show. Mr. Bhasin, I wanted to begin by asking you about Zee Entertainment, and that stock continues to entertain, right? This morning, again, there are reports coming in which suggest that the merger talks are back on the table, and probably we'll hear more updates in the next 24 to 48 hours. What should one do, whether an investor or a trader?
Very good morning to you, Anisha. Lovely news you broken out, and even I have been smiling cheek to cheek, and hopefully being paid out for both Paytm and Z being contrarian. We hold both the stocks, and we told you you cannot get entertainment in India of the size of Z at 14,000 crore. I think there will be a huge breakthrough, and if it does become an MNC, then God willing, 350, 400, 500, anything is on the cards. All you have to do is go through this next 48 hours. I'm very, very positive. I think there is whatever the differences are, both the parties are sitting down. We will leave it up to that. But like I told you, you were seeing that there was accumulation from smart money. And I think it's a throwaway price 180. So please, if you are seeing and you are waiting for the news, go ahead and take a call, buy some stocks now. And I think that you'll be richly rewarded. If this MNC play goes off, Anisha, it will be a game changer for the media space. And I think Sony's presence will be very, very well advocated in the stock price and the results forthcoming from it. So as a disclosure, Z is in our portfolio, and it's been a little painful, but I think after pain, gain is going to be there very much on the cards.
Oh, yes, indeed. And now with Zee and Sony huddling right back again to salvage the merger, the talks have been revived. We'll just have to see how this epic drama, I think, really plays out. But let's also get in your thoughts then on the Kotak Bank rejig that we've seen. How is it that you're reading into all of these developments, what it could potentially mean for Kotak Mahindra?
So, Avan, clearly Kotak has been one large cap bank which has disappointed. We were optimistic given that they are in all businesses which are doing exceedingly well. And I think this the lacuna after Uday Kotak's exit has left unnecessarily pessimism. The results, the numbers, the net interest income, margins all seem very, very steady. They've been one of the best profile as far as lowest NPAs. I think the Rejig should do well. Also, Avan, as a disclosure, we think that private banks now are in a much better space to grow rather than some of the PSUs. So take some money off the PSUs. We are not saying totally exit, but get into some of the quality large cap private banks. And that includes HDFC Bank, by the way, which clearly clarified that they are not going to give in to lower NIMs just for the sake of deposits. There will be a gradual incline. And at 2-time price to book, I think HDFC Bank now seems the large cap which can move. We are optimistic on all three: HDFC, ICICI, and Kotak.
Okay, positive on all of these private banking names, clearly value on the table.
Sanjeev sir, good morning, and this is Vinny joining in as well. What I want to talk about is GCPL as well. The numbers have been good this time. They've outperformed in terms of the FMCG pack. Now, yesterday they came in with an announcement in terms of the reorganization of their East Africa business and the divestment there. How are you looking at GCPL overall in the FMCG pack? Do you think, given that the strong earnings are going on, focus on, leveraging and moving towards better profitability is something that could work out well for them?
Yeah, good morning, Vinny. So actually from the last 2 years, this has been one of our top picks and it has outperformed the FMCG basket. We've been close to 650, 670, and we were recommending very strongly that their Malaysian, Indonesian market growth will be in high double digits. And that is how it has played out. I think that they are focusing well on a lot of models abroad. And given the franchise which they have, I think they have a huge market share to gain over there. Yes, there will be a little bit of EBITDA loss because of expansion, but I think the brand is very well enriched. I would not give a buy here. As an alternate, I think Dabur fits the bill perfectly. This stock has not done much. The management is very, very optimistic, and I would rather take some money off Godrej Consumer and add into Dabur. Both these stocks are in our portfolio. We have booked profit in Godrej Consumer, but we are now more bullish on Dabur as a FMCG play. Also, we think FMCG now will start to rear up as rural incomes go. You cannot just have motorcycle do well. I think the other basket of staples is here now to perform. So Dabur would be my top pick over here in the FMCG basket.
Okay, fair enough. Meantime, let's also get in your take then on Coal India, Sanjeev. What is your outlook given that now a lot of brokerages have come out with their view on Coal India, saying that valuations are fair but dividend yield still remains a little bit elevated? How are you looking at the news with respect to the drop in the e-auction premium?
So, Avan, it's difficult to call a stock which has been a multi-bagger from 220, it has gone to 450. Don't chase it. All the dividend yield, good news is in the price. The best of the earnings are priced in. Thermal capacity is also very well priced in as far as power goes. I would take some chips off the block in a large part of the PSU basket and try and get into other names. Like I told you, private banks, insurance, SBI Life is something which is our top pick. We like Dabur and a whole host and Z. Why not take a little bit? So I think this is a good time to take some money off the PSUs. You will be leaving maybe 5-10% off the cuff, but you are encashing some of the large gains which these companies have had. They are large commodity players, and yesterday they did sound that their output is now on a decline, which I think should see some amount of consolidation, if not correction, in the near term.
Meantime, Sanjeev, let's also get in your thoughts on the entire domestic tourism boost, how you look at that really benefiting companies and the entire travel sector as a whole. What do you like?
So we've liked Indigo, we've liked Indian hotels and the entertainment side. We like Ashok Leland, which is the largest bus carrier as a corollary to that. But you are seeing across the board, apps which do the bookings, the other conduits of that, Ease My Trip, Make My Trip, all those do extremely well. Large part of that is built in the price. There are no free lunches. Ashok Leland would still be my top pick. But Avan, I want to stress one point. There is always this provincial overhang of over ownership of stock, maybe like an HDFC. But once you see clarity on numbers, you see clarity on the management and the guidance where they are not ready to sacrifice NIMs and margins, and the profitability still remains on a steady wicket. They've also guided on the LDR ratio, which over a period of time will decrease. I think this is a quality time where you want to be in less of the riskier areas and in steadier businesses like HDFC, which may not do very much for the next 1 or 2 quarters. But then you never get in 10 years an opportunity to buy 2 times price to book the fifth largest bank in the world. So I would be very, very steady on SBI Life, HDFC Bank, Dabur, and say Z. These are 4 or 5 names which are pedigree in their names. The broader market is looking overbought and little frothy. Be watchful over there.
Let's just check in as to what were some of the movers in yesterday's trade, and you had a lot of support coming in from some of the heavyweights as well, the likes of a Reliance Industries. You also had ICICI Bank, which performed, and there's some positive brokerage views as well on a Reliance Industries. Do you believe that, Sanjeev, it is going to be some of the large caps that will lead the way going into the next leg of the up move, if at all we were to see that play out after maybe a phase of consolidation?
Yes, Avan, and clearly Reliance has been at the forefront along with maybe a TCS and I think now it's about time HDFC Bank added weight to the Bank Nifty. I think Bank Nifty's earnings, the Bank Nifty support, the Bank Nifty's underperformance should be coming to an end. If we get past this 46,500, 47,000, then I think Bank Nifty will lead the way. It is now the time for HDFC Bank to give support to the market. Both HDFC and Reliance, as you are aware, they have a large weightage on both the Nifty and the Bank Nifty. And these are the two stocks actually which we are very, very confident of outperforming.
Point taken. So those are the stocks that you're quite positive that will outperform. Just addressing the news flow on Tourism Finance Corporation, seems like a large block deal has happened on that one. Almost 13% equity has actually changed hands. It's a fairly liquid counter in any case. So seems like there has been a bit of a block which has come in from a few consortiums together, because I can't see any single holder having 13% stake. So we'll wait by and see what exactly has happened there. But in terms of the other news makers, yesterday's PB FinTech move was quite interesting, given that gain of almost 9 to 10% on account of the composite insurance license that they got. Mr. Bhasin, I know your view on Paytm, but what's the view on PB FinTech, even delivery for that matter?
So, Anisha, we hold all three in equal quantity, slightly more on PB FinTech and Zomato because of the gains. and we intend to hold that basket. Paytm, as you know, has been an underperformer, so we are waiting for some more color on that. We maybe the burst is priced in, but it will take some time before you digest all the news flow and the weak hands weak hands move out. PB Fintech is one of our star performers, but at 1,000 we will not chase it. We will just be with it. I would also like to comment on one more news item which people may have missed. Vedanta is looking to sell some of its steel business which it acquired about 8 years back, and that is now going to be sold at a substantial premium. The talks on the paper are that one of the ex-ArcelorMittal person is buying it in a fund, and you know that Vedanta's underperformance is there because of the huge debt overhang. I am of the view that in the metal basket, Vedanta is a dark horse which can be a huge outperformer given its presence in all businesses from oil, gas, thermal power, and the other commodity basket, including silver, platinum, zinc, aluminum, and copper. And if this news flow is good and the debt is reduced, then this stock can be re-rated on the upside. As a disclosure, Vedanta is something which we are accumulating, and we are very, very optimistic on the metal cycle.
Autos as a pack has been doing really well. Mr. Bhasin, what's your view on that, and where does the preference lie? Two-wheelers, four-wheelers, within that as well? Tell us your top bets.
Maruti, Bosch, all doublers. I still think there is more steam. Tata Motors, and my underperformer Ashok Leyland. I would still put money on Ashok Leyland given the ascent into all businesses. The bus market is growing rapidly. They are 53% market share in the bus market, third largest in the world. And I continue to be overweight Maruti. I had given a target from 8,000 at 12,000, and little did we know it will be there very, very soon. Same is the case with Bosch. 25 has now become 29,000. 32,000 is very much on the cards. The underperformer or the outperformer or the underperformer has been Ashok Leyland, which I think can catch up. And Hero Moto also one of my top favorites at 5,000. There are no free lunches now, Anisha. So do your stock pickings. As a disclosure, these have been in our portfolio from some time and relatively outperforming. But we think auto and real estate are something where you should take some chips off the block.
Okay, Mr. Bhasin, thank you so much for joining in with us this morning on ET Now.